It is almost time to just go buy barbed wire and fence in your cornfield, isn't it?
Buy some posts, get some barbed wire, start calving, and that is the answer for the corn market.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we've had some interesting spring weather. You and I fished together yesterday. I'm sure everyone wants to hear about how amazing our fishing was.
We did all right. The waves were as high as I don't know, what do you think, 3 feet?
At least.
Yeah, there was big ones out there, and it was all day. It didn't stop, but it was nice not to think about the markets, and we caught our walleyes. Just fell short of the money. They just one spot out of the money, but that's the way that goes.
You know, that's fitting.
It's always
miss it by half a pound.
One fish for thousands. You're waiting for that one, and we just didn't get that one we needed. But we did well.
Yeah. Well, did we do better than the grain markets?
Yeah, I was looking forward to this week, thinking that the China meeting that they have set up, that they're already at today, that things would be better. Obviously, with a lot of rain in the forecast, the market says, hey, let's press the short side even harder than we've already pressed. And what we got, wheat down 10, 11, 14 in some of the contracts. Corn down 9.5 in December. So we had a nice little rally going last week. We're coming into the seasonal. It looks good. And complete train wreck in the grains today. We had great export inspections for corn, yet again. Great export inspections for beans. They are bull spreading where the front is stronger than the back end, the new crop. But it just doesn't matter. It's getting all whacked today. What are we down? It's 5.5, 6 in the front of corn, down 9 3/4. And where does this leave a guy? I mean, that's what we're going to talk about. As a producer, where does this leave you, and what choices do you have on this new crop? It's barely out of the ground. It's certainly not knee high around here yet. It's getting closer.
Man, it looks good though. So
yeah,
I mean that's the thing. I mean, the crops look good.
Yeah, and you're going to hear it on Facebook or Twitter. You're going to find behind fields or too wet. I mean, you're going to find that. But when you're starting to stretch with too wet, right before a big summer warm up here, that gets to be a tough reason for it to go higher. So the market's easiest pathway is down, and that's what we're doing today. It hasn't seemed to matter if we've had good news. This is a market where they broke a record. They shorted the most from February into, as of last Friday, ever in a row in corn, meaning they went from a very long position to a very short position in the smallest time frame they've ever done that. Right into a growing season, betting the weather was going to be perfect, and so far, that bet's right, which really stinks for opportunities and hedging opportunities. This is where you're planning, you're starting to look at stuff. We just hit 450 in December corn overnight. It was just getting to these levels where it was starting to make sense to even look at stuff. The insider had been talking about March $4 puts. It's not like they got way more expensive after it today, but this is the reason. The weather is good. I'm anxious and I want to get a start on stuff. That is not going to hedge your farm. But what do you do with this market that they're breaking nearly every day? We had a break last week at 3 days up, and the weather looks perfect. So what do you do in the middle of June when you have no idea what you're going to have for yield, no idea on anything? How do you market this?
Right. I wish I had an answer for that, and I'm afraid there isn't one.
It feels like if you flinch and you start really getting aggressive down here, then of course next week something will pop up. But so far, what's popped up is better weather and a better forecast. They had a little bit of ridging forming last week, and now that's gone. To more just there's going to be heat, but there's going to be rain with it. So you start slapping stuff on now, which we're only 10 days away from the normal seasonal, if that. Then you get caught away from the rally that could happen for the rest of the summer. We don't know all of the weather. You don't see too many late summer rallies and this stuff, but we have seen some. We've seen some early lows and then some really aggressive buying off those September or August lows. Do you just take your chances, see what happens? There is no easy answer here. This is not a market where you want to get large margin calls on because it's already bad enough for the price. And then the implied volatility is really low, and there's really nothing that jumps out at me that like, hey, this is a great opportunity. I mean, what do you see?
I sadly see the exact same thing. I mean, it is sit on your hands and wait and see.
And that hasn't worked so far.
No, and I mean, really, the hope is that there is some trigger for a late season rally. And we did see that with beans last year, going end of August into September.
Yep.
Had a really nice rally coming in there. So it's not unprecedented. It just, I don't think there's a move you should make in grains right now. Now, there's plenty of other things
yes,
that have opportunity to do things, but if you're hedging grains, it's not now, in my opinion. Yeah,
and just when you thought there was good news in cattle, and as the market closed, there got to be even better news. The rumors of a large operator trying to short squeeze the market, packer, feedlot, whatever combination of the rumor is, but the cash did hit to 243 in western Nebraska, 238 in a lot of spots, and it just keeps going higher, and it keeps getting it obviously keeps getting more dangerous up here. But the futures are still lagging. They haven't been able to catch up, even though the futures have rallied very sharply. And it's this thing that just feeds on itself. Everyone wants to know, how high can this go? No one knows. No one's ever seen anything like this. All brand new stuff, very dangerous market to get involved in on any side, long or short. All that good news you would have thought we'd be near limit up today. Opens up $1, and I think it was down $1 within 5 minutes.
Yep.
And now it's up $1. I mean, you can't even quote it. I mean, you're gonna have to look at a screen when you quote it because it's all over the place. And it's hard. It's a tough short, dangerous short. But that's the good news. I mean, the cattle market, the hog market, both those markets are finding buying nearly every day. Look, the hogs at 110 in August. That has to be as high as we've seen August in quite some time.
It's definitely the highest I've seen it.
Yeah, you had your 120 June with the PD, 124. The 120s obviously stop hogs quite a bit. But they've had nothing but buying there too. So the meat complex is where all the good news has been concentrated in. It's been very good news. And then you look over at the grain markets, and you wish you were a rancher. You don't, not often do you say that. The roles are reversed here though, and it's nothing but bad news. It seems like in the grains every day, and it kind of wears on a guy.
What's interesting though is that even with all the great news in cattle, like there's still not a hedging opportunity because you're $20 under cash.
Yeah, I mean, depending on what cash you're looking at, you're still so far under. June is in deliveries. You don't want much to do with the June contract. Then you have August. Obviously a big discount to June. And what do you do with that market? Well, yeah, it's very hard to hedge. The one thing that you can do on feeder cattle, if you have puts on, now you can roll your hedges up, meaning let's say you bought a 285, I'm throwing that out there, 286. You can now look at for like $3. It depends on the time period, but you can roll up significantly, $10 to $15. So you can keep on moving your floor up. Yes, it's going to cost you an additional amount of money, but it also locks in that guarantee of that price. So if it does fall, you have that higher floor. Now, if you have the LRP, you can't be changing that. With puts, you can sell your old puts, get what you can get for them. Let's say you bought them for $7, and now they're worth $3.50. You get that $3.50, apply that to a higher floor. So the feeder cattle market is a market where you could roll your hedges if you had previous lower puts. You could roll them higher right now. That would make a lot of sense, unless you thought it was going to run more. Then you would want to wait. But then your put that you had bought previously would depreciate it. But then you look over at the grains. I was kicking the tires on the March puts. I like that stuff. There's not a lot you can do in the grains. This is I've talked to guys, what are they doing? Some guys are doing accumulators if they're offered. Of course, that comes with a lot of risk. Some guys had marketed a little bit beforehand, 480, and that if you're lucky enough to get in that zone. And but with this implied volatility, it's not like you're gonna. You got to sell like a 455 call to get 20 cents. Right. You have to be very, very close to the money to get any money, with a lot of time where a lot of things could change,
which equals a lot of risk.
Yeah, so you can take a lot of risk and lock in a better price, or you can watch it, which absolutely has not been working either. It's one of these rare years where there's just not an easy answer, and it wasn't too bad when guys were planting and distracted. Now they're back in. It's raining today, and what does a guy do? There's no good answer here, because we've seen this old rope-a-dope where it's everybody tells you how low this is going to go, and it's never going to go higher again. And then later on, early summer lows or early fall lows, or harvest lows, I should say, and then come rocketing out of there when the funds buy it aggressively for whatever reason that they feel they need to. Are they going to knock their buddies on the short side out? What are they going to do with all this? So that's the trap I don't want to fall into. But you look out the window, like you say, and we were driving around a little bit, and everybody else is too. I have trucker clients, and I get a pretty good preview of what's out there on a lot of different roads. And I don't hear any complaints. Do you hear anything that negative?
Definitely not negative. Everything has been perfection.
Yep.
And that just makes it tough. It's great for the crop. Like, the harvest should be great. It's bad for the price.
Yes.
And so you can wish for higher prices, but it's probably wishing on someone to lose their whole crop, like a large amount of America in some way.
Yeah.
Because exports even pick up more?
No.
Than what they are? The exports are good.
Yeah.
So the numbers are off somewhere, like we've talked about.
Yeah, the numbers don't appear. There appears to be more corn around. Whether there was higher test weight, and that's where all this extra corn, they're saying feed and residual use is way down, but that doesn't explain where you have near record export demand. Low carryover numbers, and this poor of a market. That's something that's never really happened before. So something's way off on that. But you are getting the bad news is you're getting good news right now. Other than the weather's been ideal and the plantings were
welcome to the bad news. Here's a whole bunch of good news.
Yeah, and that's the market we were trading. So it's like once it gets to be all bad news, the theory is, well, that's probably where they're going to buy it. You're reaching when that's your plan, is that it's so bad that hopefully that they buy it to trick everybody. But the market has done that a couple times, so it's not like out of the question. But that's about as bad a marketing plan as I've ever seen. But I don't have a good one, so it's not like do mine. Last year we talked a lot about it. You can go look at the old episodes. There was actually quite a bit to do this time of year, quite a bit to talk about. This year is nothing like that, and it's just one of those years. And we don't mean to talk negatively about the grains nonstop, but there's not a lot of good news happening or numbers wise. Last week gave me some hope that we're going to carry over into this week, and then you see the screen, and that there's nothing good there.
No, nothing. So let's talk about some good though. There's platinum. I want to talk some outside market. Let's talk some other markets, because there's some good stuff going on.
Yeah, why don't I take my own advice? I think it's up 4.5%. It's 4.5% in platinum. Platinum's been on a tear. I think we're at 12.20 somewhere in there, and that's the highest that's been in a long time. So gold, being the leader, finally has some of these other metals. I think we've had 4 pretty good days up in a row, especially the last 3 days for platinum, near vertical climb in that. When you condense the chart down and shrink it, it's a very, very steep climb that we have going there, and that's just catching up with gold. And the big one is silver. Everybody wants to know when's silver going to start moving. These are the old highs from what? Boy, I can remember buying silver at 35. It had to be 12 years ago.
Yeah,
13
around there.
And now we're only hitting those old highs where gold is taking out highs or had been taking out old highs. So everybody's waiting for the silver bust to take off. And then there's some guys watching oats. That's another market that recently went up. I don't know what it is about oats, but guys like oats, and it is a grain that has been climbing. So there's been some interesting moves, nothing predictable. The metals, they've been basically buying any dip. And then you have like crude oil has been all over the board. At 64, we're starting to slowly climb here. It is summer, and that's not uncommon. And then you look at, like the NASDAQ and all the indexes, the Dow, and that has been on a steady climb as well. So you don't have a lot of rhyme and reason to the outside markets. The dollar's been declining, which should help our exports, and it is. And again, it's not really helping the price, but our exports and the grains are moving. But normally there's a lot of stuff to look at and a lot of stuff to do. We have no idea where the interest rates are going. Metals and cattle have been basically leading the way here lately. And beyond that, there's not much predictability about anything else. And that's what's made these markets really difficult. And sometimes the best move is to not do anything. I feel like platinum was just sitting there. That seemed like a market that a guy could have got involved in a little bit quicker. And now it gets to be tough to chase that. What do you see?
Well, I did just look up the numbers here. So silver, 2012 was the last time it was at this level.
Yep.
Towards the end of 2012, we were around $50 back in that time frame too. We're at 36-ish now. So, I mean, yeah, you were right. It's been 12 years or so.
Yeah, but, I know because I bought some up there, physical silver, so I remember it well. And then it went down every day.
Every day for the next 12 years.
Yeah, and I also remember sitting around on Ampex. I buy some on Ampex. That's .com, and they just deliver right to your door. But there also was sales for $19, delivered, or even less than that, $18. I remember. That's with the premium. So it went from going to explode in 2007-8 to it imploded until now. And now the big question is it waking up? Is it going to break out above those old highs and then really cruise? It's been up to 50 when the Hunt brothers tried to corner the market way back when. But that's the market they say is really being held back. And when that one goes, look out. And the gold and silver ratio is way out of whack. But, we are looking for markets that a guy can get involved in, and there's plenty of risk there. So it's really hard to just step in the bull market, but it's honestly been working in gold on any dip. And now platinum's kind of woke up, but you start getting involved in metals, and then you see the indexes come off. Then all of a sudden platinum will turn back into that tied to the economy. And so it doesn't come without a lot of risk in these markets. You could say that about oil or anything else. And the interest rate's really the most frustrating for me because we have no clear direction on anything. The administration's fighting with the Fed. The Fed's saying one thing, they're saying one thing. And I think everybody wants lower rates, but the market's saying we're going to have higher rates in the 30-year, which is nothing that the Fed controls. They don't control the back end. They only control the front end, short-term rates. So the back end's been saying, hey, we need more money for the amount of debt you guys are taking on. No more of those low rates. And that's the mess we're in. It's not easy, not predictable, and we still don't have any clear direction there.
Yeah. I mean, I do watch the Dow and the S&P every day, and there's been some opportunity, but it's just like all the other markets. Like you have maybe a couple hours of opportunity.
Yep.
It's not, there are not any sit and hold trades out there. I have been watching crude a little bit again. We're back up in the $64, $65 range.
Yep.
After it was set back quite a bit over the last month or two, it's kind of building back up. We'll see. I might be interested if it gets back in that 70 range to start looking at some other things, but there's not. I mean, even those moves would be maybe a day. You're talking really short swings is really all that's out there to trade right now. That's
been the way that the markets have been, except for cattle. There's been exceptions to the rule where they're a little smoother trends. But you look at what we hope that happens in the grains. We didn't talk about much is the China meeting that could be a catalyst for short covering changes. Maybe China's going to sign on to the phase 1 again, and we'll see all this great buying. We're hoping for something and waiting, and we're watching the prices decline. So it's kind of a tough game, but sometimes the best move, like we've been saying, is no move at all, and it has not been rewarding to do that in grain. Sometimes when you make no move, you get rewarded, and it's been punishing there too. So by next week, though, things will have changed. We hope that meeting changes stuff. It sounded very hopeful. They're flying a bunch of people over there, and everybody's going to talk. So, things could change very quickly there. We could have shorts covering, but we won't keep it too long today. I mean, it's just, what do you say about a market that nobody wants to buy in the grains? There's not much to talk about there.
That's right. So it makes for quiet days in the office. It makes for sad brokers, and it's a rainy day. It's a Monday.
Yeah,
and it's got us down.
So unusual. Usually you have so much ground to cover to get a hold of so many people, and get these ideas like when he gets here, or it's already here, let's do this. And there's just none of this. It's this slow sinking feeling that we don't know where any of these grains are going. Corn looks the most bearish. Wheat's been the most bearish. And wheat's had a lot of good news, actually. Even the recent rains, continually rains on this wheat. They don't care. It's definitely affecting it in the field. Now it's going to start affecting the Chicago crop as well. No worries whatsoever from wheat. It has 2 or 3 days up, just like corn, and the shorts just step right back in, and that's the mean market that we have. And I don't see it changing until we have a catalyst.
Well, maybe that will happen before our next episode, John. Let's wrap it up there, and want to leave your number in case people do want to chat. Maybe they want to call and brighten your day.
Maybe they have a plan. Maybe they have some good ideas. I want to hear them. 218-731-1578.
Thanks, John.
Bye.